Hello investors, welcome to Simpli Stocks. Every year brings a new bull market which produces new winners. In every new bull run, new sectors emerge that trend and their companies perform well. For instance, after 2020, chemical companies performed very well when supply chains shifted from China to India. Similarly, post-COVID, as the hospitality sector got back on track and we saw a good rally in the hospitality sector, then came the bull run in defense and railways. And around the same time, solar EPC businesses also did well. So in today's video, we will study 3 emerging sectors or themes that can trend this year in 2026. We will look at what is happening at the sector level, what developments are taking place, and which businesses can benefit the most. But yes, as a standard disclaimer, this video is not a buy or sell recommendation on any of the businesses that we will discuss. Please remember that. With that, let's begin. The first theme that we will study and which will remain in focus this year is shipbuilding in defense. The Indian government has recently announced a package of approximately 70,000 crore rupees to grow the shipbuilding and maritime sector in India. Currently, India has less than 1% share in the international shipbuilding market. China, South Korea and Japan are the biggest shipbuilding hubs, but they have excessive orders and their manufacturing capacity is lagging. In such a situation, the manufacturing base can shift here and India can become a good option. Therefore, here on, the government's focus will be on ensuring that it provides ample support and shipbuilding sector does well in India. Most likely, we will hear about this in the budget as well. In this, 3 businesses will be in focus. The first one is GRSE or Garden Reach Shipbuilders. Garden Reach currently has order book of around 20,000 crore rupees and their management has given a guidance that by the end of this year, their order book can go up to 50,000 crore rupees. They are already the L1 bidder for NGC warships, which has order size of 25,000 crore. Furthermore, P-17 Bravo warships are also in pipeline, which can take their order book to 75,000 crore by the end of FY27 or say in the next 12 to 15 months. So this order book expansion is a very big trigger for GRSE. In businesses where business comes from orders, the market doesn't wait for sales and profit growth to appear. As new orders are received, the script performs well in the market because once an order is secured, there is visibility for sales and profits. It tells us the potential earnings growth. For example, Titagarh and GE Vernova did well when they were receiving back-to-back new orders. Apart from this, another thing working in favor of GRSE is that it is in the later stages of completion for several large projects. What happens is in shipbuilding, when a ship is nearing completion, margins are better and revenue recognition is higher. In such cases, sales growth looks much better. You can see this in their results as well. Margins are expanding and sales growth is also very strong. So GRSE is a good business that you can keep on your radar. Another business that can trend is Krishna Defense. They manufacture such bulb bars which are used in the construction of main structure of a ship, which is also called hull. Therefore, as work progresses on new ships and warships in India, Krishna Defense will be a direct beneficiary. They also have BV class certification for making bulb bars. However, you have to keep in mind the valuation here is a bit premium. The third business that will remain in focus is Kirloskar Oil, which recently received a large order for a ship engine from the Navy. This is the first time that diesel engines are being designed and manufactured in India. Moving forward, if more such orders are received, then Kirloskar can also trend in the shipbuilding theme. As for Mazagon Dock, I am not very optimistic because their management has stated that this year and next will go dry with the growth of only around 5% or so. Improvement in growth rate is expected from FY28 onwards only when work on submarine projects will begin. Now, a humble request, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video and yes, also subscribe to our channel. Let us move forward. The next industry segment that will be in a spotlight this year is gold lending sector or gold loan segment. In gold lending, people take loans by pledging their gold. Now, see, due to the rally in gold prices, we are seeing very good growth across the entire gold lending space. With higher gold rates, a customer can get a higher loan amount for the same quantity of gold now. On the other hand, the bank or NBFC also earns more interest income by lending a bigger amount of loan. So in the past few months, excellent growth has been seen in the gold loans segment, and gold loan books of banks and NBFCs have more than doubled on a YOY basis. Or you can also say that this industry segment has more than doubled itself. Another benefit that gold lenders have received is that RBI has become very strict on unsecured lending, meaning loans without collateral. Over the last year and a half, loan defaults have increased in microfinance and unsecured lending. To keep risk under control in the sector, several checks and standards have been introduced. Consequently, the demand for personal unsecured loans has decreased or come down. Moreover, customers have to pay higher interest on personal loans because they are unsecured. So that interest rate differential is also there. That gold loans being secured are cheaper or available at lower interest rates than unsecured personal loans. Plus, there is also a mindset shift here. Earlier, people saw gold loans as a taboo. That mindset shift is also happening. And anyways, people need money for one reason or another. Now, loans without collateral are cumbersome to avail or the interest rate is high. So, next option left is to pledge gold. The growth is immense in the sector as there is very strong tailwind. Just 3-4 days ago, the December quarter business update of CSB Bank came out, and you will see that their gold loan segment has seen massive 46% growth. Since then, the CSB's script has also done very well, but I believe this is just the start. This theme will trend entire year in 2026. We have been repeatedly covering CSB and other good businesses from gold lending theme in our community for the last 6 to 7 months. Two other strong names for this theme are Capri Global Capital and Fedbank Financial Services. We have covered them on our channel as well. I will put the links to the old videos of Capri Global, Fedbank Financial and CSB Bank in the description. You can learn more about these businesses from there. The third theme to track for this year is of tech and internet businesses, where I expect to see many outperformers. For many such tech businesses, we can see a J-curve in their profitability in 2026. Profit margins will expand rapidly, leading to bottom line expansion and strong profit growth. Here, listen to me very carefully, because one of the biggest advantage of a tech business is that the development cost of your platform is one-time expense. Once you have built your platform, app or website, your expenses will not increase at the same speed as your sales. If sales growth is 40%, your expenses might increase by at most 10, 15 or 20%. In such a case, your profit growth can be 60% or even higher. So as a tech business becomes bigger in size, this margin expansion happens very quickly. Several tech businesses like CarTrade, Blackbuck, Yatra Online and Zaggle Prepaid are maturing and their profit margins are growing very rapidly. As an example, you can see in this slide from Blackbuck's investor presentation. Here you will notice how EBITDA margin was negative 2 years ago. Then it reached 5 to 10% and now look how quickly the company has achieved 30 to 35% EBITDA margin in just 1 year. So this margin expansion leads to exponential growth in net profit or bottom line. And the high PE you see in tech businesses usually normalizes with just 2 to 3 quarters of good results. Besides this, the valuation of most tech businesses has come down and become reasonable. You might remember that many tech businesses had their IPOs a year and a half or 2 years ago. But at that time, their valuations were very high and there was no clarity on margins. Since then, these businesses have corrected significantly. Investors got clarity on margins. They moved from losses to profits and valuations became attractive. So you should not reject internet or tech businesses just by looking at their PEs of 40, 50 or 75. Very interesting things are happening here and this theme will definitely emerge this year. You can independently study CarTrade, Blackbuck, Zaggle and Yatra. And I hope this year goes well for you. May you come across multiple great models, business models, and you make good money. Furthermore, if you like this video, then do give me a thumbs up. Also, you can subscribe to our channel, Simpli Stocks. It takes a lot of hard work and time to identify all these trends and themes. In return, we only ask for your support in the form of likes and subscribes. If you support us by liking this video and subscribing to our channel, we will be able to bring more such great videos and analysis for you every week. So I'll see you in the next video. Happy investing.